Hey guys, how's it going? Welcome to the London session recap for Euro Dollar on August the 25th, 2022. So, daily chart. We are in a new bearish daily swing range and we've had that daily break of structure, right? So, after that break of structure, we can start to assume that price may want to pull back. Now, whether we're going to just have a bit of a pullback and continue down or we're going to get a bit more of a swing pullback, that remains to be seen. But obviously, we can use the lower time frames to help guide us with that. For our chart, we are now currently in the same swing range. Just ignore these lines, it's annotations, but we're in the same swing range as what we are now on the daily chart. So my 4-hour swing high is all the way up here, as that was the highest point that broke the swing low over here. I'm not sure what this line is, but I think it's annotation. Yeah, sorry, just ignore that. So similarly to the daily chart, right, after we have that break of structure, what can we expect? We can expect a potential 4-hour swing pullback. We need an internal structure break to the upside to signal the start of that swing pullback, right? So far, all we've had is that bullish chock. Chock signals an internal pullback, but it's only once we get an IBOS that we kind of have that true confirmation. So now we've had that bullish chock, and we've kind of had a bit of a bigger pullback. If we were to now break this high, and that would give us that IBOS, now I'm really starting to think like potentially, we are going to get that deeper pullback, especially if we can start to clear out these levels of supply. So when we initially got that bullish chock yesterday, nice big movement. I did think that was a potential that we could, see that movement. Especially when the demand held during New York. So the expectation really is for this high to go. It's failed to take out this low. So, it's pretty much a weak high. Yes, it did technically cause a bearish chock, right? Because that was what ends up being the fractal low. So then price comes down and takes it. But as you would have seen in my pre-session analysis, this is the kind of type of environment where you have to understand when to, how to interpret chock and when to use it as useful information or not. In this instance, right, you can see it's most likely just going to be a sweep. Like it's clearly failed to take out this low. It's failed to completely take out demand. So I'm still cautious that there's been a bearish chock and obviously price could do something like that. But I think based on the probabilities, right, we've had that boss, we've had, the chock there. We've come into supply. That supply has failed to take out demand. It's failed to break this low. And now we're coming up, right? It's pretty likely this high is going to go. So for now, the expectation, at least coming into the London session, is we're probably going to at least run that high and come into the supply level. And then if we can get a 4-hour closure above here, that would technically be a 4-hour bullish IBOS. So then potentially we can expect that deeper swing pullback. Because if we get that 4-hour bullish IBOS above this high, we close above. Even if we start to reject supply, now we have that strong internal low, right? And price can come into here, reject demand, and then potentially continue up, right? Until what? Until we get that bearish IBOS, which will then signal the end of the swing pullback. And then we can expect those bearish internal ranges to hold, right? Selling from these strong highs that are taking out the lows all the way down until we take out that weak swing low. Okay, so again, to keep things a little bit more simple, just purely for like a London session bias, we've had that 4-hour break of structure, potentially expecting we can get that 4-hour swing pullback. We had that initial bullish chock into supply. That just gave a reaction back down to demand. Demand then held during yesterday's New York, and we were coming to the upside. We failed to take out that low. So at this point, I'm thinking, right, this high is most likely going to get run. It's weak. And we can at least look for a move to run that high up into supply and then potentially play a little bit of an internal pullback there. Cool. So dropping down to the M15. We had the M15 swing trend as bullish. Now, even if you didn't view this as a swing pullback and that was just internal structure for you, it doesn't massively matter, right? Because either way, this still becomes a strong low that took out this high. So then when price is pulling back, right, we expect this low to hold and then we expect price to continue and take out that high there. So yesterday we had that as our bullish swing range and it still was coming into London today between this. So this wasn't here. This is how it looked, right? Between this swing low and this swing high. So the internal structure of that swing range switched bearish to facilitate what? To facilitate the swing pullback. So that was what the opportunities we were playing yesterday, right? Following these bearish internal ranges to follow that swing pullback. And then we had a pullback here, failed to close below the low. It was a sweep of liquidity. And then we got the bullish IBOS there. So once we got that, what does that confirm? It confirms the end of the swing pullback. Why? Well, because now the bearish internal structure is now realigned with the bullish swing structure. Okay, we've now shifted bullish. Order flow, the internal order flow is now aligned itself back bullish with the overall swing structure. So now the expectation is that these bullish ranges, i.e. this strong low that took at this high, that should hold, right? Price should pull back, but not break this low because it's a strong low. And then we expect these bullish ranges to hold until we take out this high. So when we get this next bullish IBOS up here, just closes now, right? Now this then becomes this new strong low. So this is the new range we're playing within. So now the expectation is price can pull back, but it shouldn't break this low. And we should get those continued bullish ranges until we take out that high. So to keep it even more simple, get rid of these orange lines. So M15 swing trend is bullish. Okay, we're expecting a 4-hour pullback. The M15 has then pulled down into basically the extreme. The strong low is held. That internal structure has then shifted bullish, right? Confirming the end of the swing pullback. So now we're expecting this high to be broken. But what we also expect is these internal ranges will hold until it takes out that high. So expect the internal structure to stay bullish until that happens. Okay. So then coming into London, we had the bullish IBOS confirmed here, which then gave us our new internal range here. So we have this as our M15 strong internal low, right? And we can work with the assumption coming into London that this is the range we can play for the session, right? And we can look for longs from any of these demand zones, to try and anticipate the internal higher low. So looking to catch this internal higher low to, at a minimum, target the weak internal high, but ideally, especially as we're so near, ready to take out that high there. And if we didn't, we can just look for that pullback and again expect that that low would hold until we take out that high. Okay, so this was great because I had a very clear bias coming into London. Internal structures realigned with M15 structure. It's probably a good chance that's the start of the 4-hour swing pullback, or at least targeting up to the next 4-hour supply. So from an intraday perspective, happy days, right? The tricky bit was, where is the high low going to form? Now, this is how I had the M15. Actually, I had it slightly different. I had to draw it in here because when you get kind of the corrective Asian session candles form, it's not very volatile. So rather than kind of trying to be super specific, trying to get that exact pivot candle, I'm kind of happy to be a little bit more loose like that and just look for a price to come into here, which I'll talk about in a minute, right? So out of these three POIs, this would be probably the most ideal because it's right on the extreme strong low. It has some nice liquidity that built through Asia, some sell-side liquidity in form of it. This is also, semi-decent. It did sweep liquidity, but it's kind of in the middle of this quite corrective move and, probably could just be inducement for the below. So I wasn't super keen on this, but be happy to look for a trade if it obviously pulls back and gives some nice confluence. And then we got this, which is probably the lowest probability of them all because it's right at the top of the range. It's just after the IBOS. And typically after the IBOS, we can expect an internal pullback. And this is where these kind of premium levels of demand can just, be there to produce internal range liquidity for price to pull back. And then we come into one of these levels, right? And then we go when we get the chock, etc. So I'm always a little bit more cautious buying right at the high after price pulls back. But what you'll notice, this is something that's will come in time and something, that like I guess I kind of have in my subconscious as I was coming to the charts today as well, is when you have this specific sort of scenario, so i.e. we're kind of expecting that potentially this is the start of that larger 4-hour pullback, so the start of that 4-hour move. The M15 is now bullish. It's pulled all the way back down to the extreme low. So like the pullback is now done, right? It's not really going to come any lower. The internal structure has now realigned itself with the swing structure. So now that we've had that move, nice big bullish momentum as well, like the odds of price coming all the way back down here or to this low, down to the swing low, are so slim. Like if this is going to be the bullish move that goes, it's going to happen from this range here. And it's going to be pretty ready to take out that. Like we've got pretty much everything aligned. And if price is then coming around sort of a demand zone right at Frankfurt Open, when you've got everything aligned, when the swing objective is complete, right, when it's pulled back, more often than not, I would say, you can then, this is an environment in which you may want to, trade from here. Like right at the start of the session, volume is likely to play out. So I'm just going to put this back one candle and I'm going to drop down to the lower time frames if I can find where my replay, there it is. Sorry, it's just below here. It's come in and it's dropped down to the old trusty M1. So I basically just wasn't very focused. I'm doing a lot of back testing and other things at the moment, and had my alert set the POI. I wasn't massively keen at buying near the highs anyway. Like it wasn't obviously super high probability. So I just set my alert there. I wasn't really looking at price action. And then obviously what happened, and if you're watching price action, which is what I should have been, and then you have your POI below, but you see price action like this. So this is where you go, okay, price is pulling back. You want to get long from this POI, but look at the M1 entry model. It's bang on Frankfurt Open, right? Around 7, bang on. That is Frankfurt Open, 7 a.m. London time. Look how clean this M1 entry model is. So what do we have? We have very clear liquidation of these equal lows, right? big V-shaped reaction, like that is just absolute textbook. We have this supply fail. Just going to draw on the chalk just so there's no ambiguity around that. We have the M1 chalk, okay, but what I like even more, it's not just a chalk, it's like a clear break of structure, like a swing boss. Like there's no denial that the M1 has switched bullish here, right? Now, you've got two POIs, you do have the extreme, but when you have what, is basically a sweep of the flip. Like the flip isn't really clear on one flip there. It kind of reacts and then it chocks up. There's no close above. And then you get the sweep of this low and then it goes. So for me, it's not really a valid flip. It's more just that we've cleared out supply. We've got the chock / boss, tons of momentum, sweep of liquidity. So in terms of the M1 entry model, bang on. Now, yes, this is the valid M1 zone. It's quite a large zone. So I'm going to talk about the M15 in a minute, but just whilst it's on the front of my mind. So like, let's say you wanted to enter, right? And you trade like me. So you want to enter on the M1 distal. Okay, cool. Let's probably run it up to about 3 pips. I want at least generally 5R to the next key structural level or supply zone, right? And in this instance, that was at the internal high. Can't quite get it. I'm buying at the top of the internal range. So this is where I'd probably go, okay, let's enter on the wick, especially when you get a big, large wick like this, like relative to recent price action. And then you can get, right, more acceptable R, at least for me, I'd want at least 5R to that high. And then if you want to target the swing high, well then happy days, right? There's 10R there, but I'm more concerned about the immediate structure there to see if I can at least get 5R to that high, okay? So that kind of means everything apart from, well, we don't have the medium time frame mitigation, right? We don't have the M15 mitigation, which is, I need that, right? So this is what I was saying earlier on the M15, is if you see price react so strongly at Frankfurt Open or, a key time, and it gives such a clean M1 entry model, well, like, use a little bit of nuance, like, especially, this is Asia price action, it's all quite corrective, it's all quite tight. Like, just refining this pivot to, like, slightly more of the range, I am more than happy to do in this instance. Like, it's not like you're refining this pivot here to, like, this whole M15 range to try and justify a trade. Like, it's just like a pip or two more higher on the M15, and I'll do that. A lot of times in circumstances like this, it's just I wasn't very focused. Also, you can add some more confidence, which I've already got some of it drawn on, but you can see the supply here, right? And essentially you have this M1 flip of that level, which you can even refine to the extreme of that reaction leg, right? Just to give you that even refined high time frame mitigation. So price comes into M1 supply, reacts, puts in a higher high, right? So that's the extreme of the flip. So super clean M1 entry model. Like I said, I just wasn't very focused, and that would have been the most ideal way to get tagged into this trade. And then obviously it flew. Arguably that's just because, everything's aligned here, big money stepping in, it makes sense. Also, there is Jackson Hole going on at the moment, which I believe, can't remember, memory serves me correct, it's like when the central bankers meet up and do their thing. I might be wrong. I don't think it's politicians. I think it's just central bankers, but I'll have to double check. I'm not too clued up on my fundamentals these days. But yeah, anyway, so that was a nice trade. At least 6R to the high and then ideally 10R. Me personally, I'd probably take most of, if not all of my profits at this high because you're trading against 4-hour supply and obviously the 4-hour is heavily bearish. For those of you who are a bit more swing traders and a bit more ambitious, there is the potential, right, that we're going to get that 4-hour pullback, like that deeper swing pullback. So you may want to hold up through that. But remember what I said, like if that's going to happen, it's likely we'd get a break and close up above. Then we'd have an internal pullback into the strong low and you've bought up here. So you have minimal stop loss protection buying at the highs. And that's why I'm always like, just take your profits and run. Unless you've entered like right at the bottom, you're not going to be able to ride out a move like that. So yeah, big fan of being a bit more aggressive with your profit. So then, okay, break of structure, readjusting the M15. What do we have going on? So we push up a little bit higher. So now we have that new M15 boss, which means this becomes our new swing low, right? It's the lowest point that takes out the high after the high was printed. And then we can annotate this here if it helps with that becoming our strong low, okay? So we come up into 4-hour supply. So at this point, you're thinking, okay, we're going to at minimum have an M15 swing pullback at some point, right? Or at least a bit of an internal pullback because we could have maybe just a small reaction like this into this low here, and then potentially we could continue up. So that was definitely the cleanest trade. Now you can look to play the counter trend pullback. We've come into 4-hour supply. Now for me personally, I really wouldn't want to look for to play that counter M15 on just an M1 entry unless price had mitigated the M15 zone, because I want to be trading from an M15 zone. So if we come into this 4-hour supply and it just gives an M1 chock, that for me is not enough. right? In most circumstances, I'm going to want that M15 mitigation to have happened. Yes, there is M15 supply here, but you can see the distal zoom right in, right? It's already been created and then mitigated. So that for me is not really a zone I'd want to jump on straight away. But yeah, this is when you can then look to play a pullback down into this internal low here potentially, or look for buys, which we'll talk about in a minute. So jumping down to the M1, what happens? So nothing's going on. Okay, now we get the M1 chock because this was all one straight leg up to the upside. So this is our M1 chock, which is basically like an M1 boss, right? It's a big sort of breaker structure to the downside. So again, not a massive advocate of sort of trading this price action. I think it's better to just kind of concentrate on longs until you get that M15 chock. But for those of you who are a bit more advanced or want to trade it, we do have that M5 chock here. I'm just going to draw it on the low. Well, I'm not even going to draw it because we've already got the M1. But yeah, essentially, if you kind of want to refine this price action a little bit more, you can use the M5 to your advantage here. And then that would be your M5 candle there, right? So then if we drop down to the M1, you could potentially use this as a POI to play the pullback. So let's see. So price comes in. Now, at this point, you've got a M1 sweep of the high. Here, we've mitigated the M5 supply POI, if this is within your plan. If not, just use this for educational purposes. It's not something I was really looking at either, to be honest with you, but definitely makes sense. So we had the M1 chock. So at this point, only real POI you could enter on is the extreme. So you could set your order on here if you'd like to do a real setup, and you're just targeting this low and ideally down into M15 demand for kind of that quick counter trend play. Now price comes down. Okay, pulls back into where essentially there's a flip. It's not really valid on the M1 because there's no break and closure below, but on this, say like the 15 second, it'd probably be a lot clearer. All right, you can see how price came into this demand level. All right, we've reacted, pushed down, and then we're probably pulling back into there, and then potentially continuing down. But it's not really an M1 flip per se, or one that I would look to take an entry on. And then price comes into it, and then pushes down. Now at this point, you can go, okay, the odds of price coming back up to here maybe aren't as high. We've now had a mitigation of the flips, and maybe now you want to follow kind of that, quote unquote supply chain forming, and now you have a new M1 POI to follow, right? If you just kind of follow that little breaker structure there, that fractal breaker structure, and then we have this level here. Okay, so this may be kind of the entry you want to consider. It's kind of just following that order flow and being a little bit more aggressive. I'd probably want to cover that high, 3.5 pips, that high there, just because that's the pullback that we're looking to play, right? This level here. So basically looking to see, will that continue that move? Can you get 5R to the low? No, so I personally wouldn't be that keen on it. But if your target is, you're trying to target down into 10-15 demand, then maybe that's enough for you. Okay, so definitely not the best trade in the world. I think it's reasonably low probability, but it's there. So I did just want to talk through that. And now if we go back to the M15, this is where you can potentially look for longs from within here, right? Looking to play that movement. So let's see what happens. So price pushes straight through it. So now you have a demand fail. So that demand chain essentially has failed. You have a bearish change of character. Okay, that bearish M15 shock. But there is obviously that original M15 POI we're looking at that has now been tapped into. So could you look for some longs from within here? Yes, potentially, because this could be just a liquidity sweep to mitigate this refined zone, right, to continue to the upside. But the fact that we've rejected for our supply, we've had the M15 boss, right, it's quite a lot of momentum to the downside. The nearest demand level has failed, right, considering we've essentially had that chain. So I'd see that as a solid demand fail. We've had a bearish change of character. I wouldn't personally be that keen to look to keep buying and buy against this. I see that as reasonably low probability. You've also got to be cautious of this supply level here as well. Potentially price is going to come into there, which did flip this demand range here. So you've got this demand, right? Price comes into it, reacts, should put in a higher high, fails to do so, and closes to the downside. So yeah, some of it, the range has been mitigated, that flip range here, but you do have that refined level there. So not personally would have been that keen to take that, and as we can see, right, it's come into here and rejected to the downside. So that was out of session anyway. But yeah, it's coming to that extreme. So there was a potential entry there where you've got the chock. It's all just getting a little bit messy, isn't it? Into that extreme there. With a potential entry, right, after that M15 change of character to get short there and play the M15 pullback from the M15 demand to supply flip. That caused that shock. So now, we can expect that swing pullback within this swing range. Whether we'll just come into this strong internal low remains to be seen. You can also obviously look at this small structure as well. So I'd be looking at that, forming small structure, and then if this low is going to hold, you'd want to see that shift bullish, and then we'd expect this movement. Otherwise, we may like stay bearish to take out that low, and then you want to look for that M15 shock or M15 IBOS to then continue to the upside. But just be a bit wary. We obviously are coming off 4 hour supply, and we haven't had a break and close above this high yet. So if we start to come down, then potentially these lows could go. It's getting a little bit messy at the moment. We do have Jackson Hole going on, so there could be a little bit more reactionary. But some longs could be decent. We do have this 4 hour demand zone. It's not great. It's only caused a wick break of the high so far, but something to be wary of there. So hope you guys took some value from that, and have a good end to the week.